Hi, everyone. My name's Greg Munroe with Munroe Morrow Wealth Management. I'm a financial advisor here, also the CEO, and I'm with my partner, Kyle Hurley. Hey, Kyle, how are you?
Doing well, Greg. Thank you.
Great. Well, everyone, this is exciting. If you're getting close to 60, the time has finally come. If you're getting even closer to 62, it's time for you to finally get paid. You've been putting into Social Security through your paychecks for 30 or 40 years. Now it's time to get yours. All right. We're going to walk you through today Social Security, some different information on it, and help you claim that. Now, one of the things Kyle and I like to talk about is people spend 40 years putting money into Social Security, and some of them spend 2 minutes with the decision on when to take their Social Security. They don't even think about it. We want to stop you from doing that. Social Security is a very nuanced thing. The book is this big on when you should take your benefits and how, and it depends on your particular circumstances. Kyle, can you walk through just on a high level how your Social Security benefit is calculated?
Absolutely, Greg. So, high level, your Social Security benefit is calculated just based on your 35 highest earning years while you were working. They do not have to be consecutive, right? But you had to have worked at a minimum of 10 years. So, and then they'll do their little whamma jamma, come up with an amount, which is your PIA or primary insurance amount, which is the maximum amount you can get at your full retirement age.
Yeah, and that full retirement age is that key number, right? So the key terms, if you're listening and watching this webinar, is your full retirement age, your FRA, and then that primary insurance amount. Those are the key terms from that you'll be looking at when you look at your Social Security statement.
Absolutely. So when can you claim the benefits, right? So Greg hit on it. So right at 62, you are eligible to claim. And then, the latest you can claim is 70. There's no reason to wait past 70. Your benefit's not going to go any higher. But, there's a lot of different implications between 62 and 70. And we're here to help you kind of determine when it makes sense for you. So we like to say, each year that you're able to delay taking your benefits, you're getting an 8% increase on that benefit, which is very, very powerful. So if you want to reduce your benefits, go ahead and claim it as early as 62, but know that your benefits will be reduced. If you want to maximize your benefits, wait to claim it till age 70 because that is the maximum amount you will get for Social Security.
When you look at this, the key thing with all of this is your full retirement age. So this is just saying to you, anyone who's listening, if you're 62 right now or 63, it's gonna your full retirement age is 67. Anybody that's younger than 62 listening to this or 61, your full retirement age is 67. All right, so you know what your full retirement age is. If you're 64, 65, 66, it's going to be somewhere between 66 and 67. And that full retirement age has a lot to do with when you want to take that Social Security. We'll walk you through that next. We went through this before. Your 35 highest earning years don't have to be consecutive. And a lot of people think it's just like their last 3 years are the most important. A lot of clients get confused. They think if they stop working at 58 or 57, that it's really going to affect their Social Security benefits. And we tell them no. You'd be surprised how little it affects your Social Security benefits because it's based on your 35 highest earning years. And they don't have to be consecutive.
Absolutely. And again, this comes back to your personal situation and frankly your health. So, we're going to kind of walk you through some high level, but we encourage you to kind of book a complimentary meeting with us to kind of just go over your own situation to figure out when it makes sense for you, right? Because there is a break even point. And, Greg and I, we go through these conversations with clients and it can get a little bit morbid, right? Some of these things that we have to think about of when we're going to pass away is not fun, but it's reality, right? We need to think about, when does it make sense for me? So, we utilize a consultation group, consulting group, excuse me, that kind of looks at all your different benefits, takes into account maybe you have some outside income too. And we want to say, when does it make sense for you? So, if that might be something that interests you, please, get in touch with us and we're happy to kind of run through this specific situation for you to really give you some insight on and some recommendations on when you should ultimately claim your benefits.
Here's the big thing that we get this all the time, right, Kyle? what if I claim my Social Security while I'm still working? So many people nowadays are working into their late 60s, their 70s, even later than that. So the question always comes up when is should I take my Social Security? Let's just keep this simple. A general rule of thumb so that you don't get negatively affected is that if you are still working and you have not reached that full retirement age, remember we just talked about that, that's somewhere between 66 and 67. So if you're still working and you haven't reached that, you're 62, 63, 64, 65, don't claim your Social Security. Because you got to get offsets on, and it's not a good idea. And once you've reached that full retirement age, then you can make as much money as you want in your job if you're still working, and you can claim your Social Security, and there won't be any negative ramifications to that. So your key takeaway on this is don't take your Social Security if you're still working at 62, 63, 64, 65. That's a general rule of thumb.
Absolutely. And because of that, right, this kind of comes into how is Social Security taxed. So, baseline, typically Social Security benefits are generally tax-free, but you could run into a situation where you start to owe federal income taxes should you start to show some combined income, higher than 44,000. That's where you'll really start to see some taxes, taking a hit on your benefits. So this is where it can be helpful to kind of just look at, what your benefits are, take into account your, the entire picture, right? All the other assets you have, there might be some other income, you might have a pension, because you want to kind of just keep in the back of your head or keep in the back of your mind, am I going to run into a situation where I'm getting, taxed pretty heavily on my Social Security? Or let's say you have a pension, you could run into what's called the windfall provision or the government pension offset. So this is where it can be helpful to meet with an advisor like myself or Greg to kind of just get a better sense of your overall situation, because you definitely want to make sure you understand the tax implications before you start claiming Social Security.
Yeah, and I'd add one thing to that, Kyle. The clients that we're working with that have done planning their whole life tend to have lots of outside assets in addition to Social Security. So their Social Security will be taxed. So there's lots of tactics we use to make sure that they don't get taxed on their Social Security. It's critically important that you have an advisor helping you with this. We find that accountants do not help the clients with this. They just don't have the time to do it. It's your advisor who should be looking at your tax situation to help you avoid the taxation on your Social Security. And we do that all the time. How do you claim your Social Security? Kyle, you want to hit on this one quickly?
Absolutely. So, you want to complete your Social Security application. You can either do this online, they still do the paper application as well, but you want to try and do this 3 months before that when you actually want to start receiving the money. So this is where, planning again will come into the picture. Don't wait till the last minute, right? Set up a complimentary meeting with us. We'll help you figure out, what your benefit might be, how to apply. We'll help you kind of walk through all of this. And most importantly, even if you aren't in your 60s right now, let's say you're in your 50s, or you are starting to get closer to that 62 age, pull down your Social Security statement. You can pull it right down from the Social Security website just to get a sense of what's the amount of benefits that you should be expecting, because then you can kind of come up with a plan on, first of all, when to turn it on, how I might be taxed. So there's all these different things, and there's a lot of useful information on that statement, which we'll see on the next slide, that will help you kind of come up with this decision. So again, right, I mean, this statement, there's a lot of information on there. It can maybe overwhelm you. This is where, it might be helpful to meet with an advisor just to make sense of it all. And then we can plug it into our tool and kind of come up with a few reports and some recommendations for you based on your own personal situation.
Survivor benefits is always a big thing, right, Kyle? So you have two spouses, and as an advisor, the spouses are usually very concerned. What if my husband passes away? What's going to happen to my Social Security benefit? And the big thing to know is that if a spouse passes away, the surviving spouse receives the higher of the two amounts of what's remaining. So let's say your husband has a benefit of $3,000 and you have a benefit of $1,500 a month, and your husband passes away. You are going to switch up to that $3,000 per month. Your $1,500 a month will go away, and you'll switch up to that higher amount. So it's important to understand how survivor benefits work with Social Security.
Yeah, and one other thing, Greg, that we kind of see a lot too is just married couples, right? So, we want to stay positive. It's not just thinking survivor benefits, but also, the spousal benefits. So even if you're a spouse who did not work and did not pay into Social Security, you actually might still be entitled to about the max would be 50% of your spouse's full retirement age amount. So, this is where you want to have this conversation, right? Do not go ahead and file Social Security without letting your spouse know, because this, that can impact them, right? So this is a conversation we have with clients all the time, and we want everybody on the same page. So that way we can all get the maximum benefits that our clients and frankly you deserve, right? So, don't go behind your spouse's back. That'll make for a tough dinner conversation. And frankly, it could screw them over a little bit when it comes to the maximum benefit they might be getting.
The big thing this year, just what we just wanted to touch on that, is because inflation has been so high. The only good thing about inflation, it's been a horrible thing for the stock market and the bond market, but for your Social Security benefits, it's a good thing. Your benefits increased close to 9% here in 2023, and it's a way to offset some of the inflationary costs associated with gas and food going up. So it's just important for you to know.
This is another one, Greg. We get quite a bit, right? Is what if Social Security runs out of money? So as of right now, I mean, they've run their analysis, and they know that the Social Security will probably run out of funding by 2035. But it's important to note that's not going to go from 100% to zero. What that would mean is that your benefit may shrink to about 80% of what you're currently expecting, right? So again, it's not, the benefits aren't going to stop, they'll just be reduced. But it's important to remember, right? I mean, who knows how things are going to play out? Older Americans who tend to really rely on this. I mean, there's been a study out there that people over age 65, they count on Social Security to basically supplement 50% of their income. Those are the ones that go to the polls, right? Those are the ones that vote. So it'll be very tough, in our opinion, for a politician to go out there and try to squash Social Security. But, we understand it's a concern, but we're optimistic that, they will figure out something. And again, it's not that they will stop, it's just that they will get reduced. And Greg, I don't know if you wanted to hit on anything else there.
Yeah, no, I mean, you nailed it. I mean, one thing that we tell clients is that if you're at a lower income or a middle income, we feel pretty confident that they're going to solve this problem. So you're not going to see this reduction in your benefits. But to be conservative, if you're a higher income earner and you're getting the maximum Social Security benefit, when we do our planning, we put in there that you're probably only going to get 75 or 80% of the benefit that you expect. And that's because most likely higher earners would be the ones that would get affected by a reduction in benefits, not those in the middle or lower end of their incomes. And as those are some of the key points that we wanted to go over with you with Social Security. Again, remember, the Social Security book is a big book. It's a very nuanced. You don't want to spend 5 minutes on it and just make a decision. Do a consultation with us. We'll use our numbers. We'll use our a consulting group that we use on Social Security, and we're going to help you in your situation with your taxable income and all of the different components that come into it, and what you need to help you determine the way to get your maximum benefits for Social Security. So try and take some action. As Kyle likes to say, it's the start that stops most people. So start. Book a complimentary consultation with us. We'll be happy to walk you through this. Also answer any other questions you have about your financial planning and your investment management. That's what we do. We'd love to have that conversation and see if we can help you get on a better track. And for Kyle and myself, thank you so much. And we enjoyed doing this for you.
Absolutely. Thank you, everyone. And please reach out to us. We're happy to help. So thank you.